All right, here we go, and we are live. This is Travis with a Spoon from Trade with Travis on YouTube, Carter Cow Trading on Facebook, and the Carter Cow Capital as a whole. I hope everybody's doing very well on this Friday morning. Let's go ahead and go through the disclaimer, and then after that, we'll go ahead and take a look at some overall trading activity in pairs so we can be able to hop in. So let's go ahead and get started with the disclaimer. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I want to do is teach you education, and from that education, you can be able to make your own informed decision about what you want to be able to do for Forex trading. Now, understand that Forex involves risks. It involves risks of being able to make money. Also involves risks of being able to lose money. So please keep that in mind. Understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So I see myself on YouTube. Hopefully everybody's doing very well when it comes down to that. For the people that will catch this video a little bit later on, make sure that you end up typing in and chatting and saying, hey, when it comes down to that. For the people on Facebook, 7 o'clockers, good morning. I hope everything's going on with you. Zap, what's going on with you? You want to take a look at what's going on with the actual charts? You can be able to hop into the Facebook page, or hop into Trade with Travis on YouTube and be able to go from there. But I hope everything's going well with your big dog, and we'll be able to go from there. So a lot of stuff ended up happening earlier this morning, and for some reason, the biggest winner out of that was the Japanese yen. And I don't understand why the Japanese yen was the biggest winner, but we'll get into it when it comes down to this overall move. A little bit earlier today, 45, our president ended up testing positive for the coronavirus. And him and his wife end up having some type of news and everything else that ended up happening with that. And as soon as that ended up happening right around 1 o'clock this morning, the markets end up shooting to the downside when it came down to the US yen, when it came down to a few other pairs. Now, because this is non-farm Friday, in the first week, or the first Friday of the week, of the month, I don't particularly trade on this day. Or if I do look for activities, I look for trying to be able to get in 15 minutes after the news ends up coming out at 8:30. So the market moving right here kind of messed me up when it came down to one of my original trades on the US yen, because I actually ended up getting out of the position because I wanted to get a higher number. And instead of being in drawdown, I just wanted to be able to see if I can get it at a better spot. So that was me basically being greedy. The market went back to my original spot, and then after that, shot right back down below 105. And we'll go over that in a quick second. But overall, that's kind of a synopsis of what happened earlier this morning. So yesterday, retail sales ended up coming out for the Australian dollar. Actually ended up being positive, but we end up seeing negative movement for the Australian dollar. We have a lot of setups going into next week that's going to end up looking very well when it comes down to trading opportunities. And I think looking at the Japanese yen, looking at the US dollar, if we could be able to bounce back from that overall news, then we should see that the US dollar should start to regain some of its strength as well. Consumer price index is actually ended up coming out for the Eurozone. All of that information was negative there. The Euro was thinking about coming up with a digital euro, kind of like a cryptocurrency. So that's something to be able to pay attention to. That was the news that actually ended up coming out. We have non-farm payrolls at 8:30, and then after that, we don't have that much of anything else like that. We have unemployment rate that may end up being one of the things that may push the market. But I do think that overall, yes, it's going to be a fundamental say from 8:30 to from probably about 8:30 to 8:45, maybe even 9 o'clock. But after right around that 10:30 to 11ish time, where it's typically right around lunchtime, I don't think we're going to see that much movement. So that's where we are when it comes down to that. Let's take a look at the currency strength meter. If we take a look at it, we can see that even though the U.S. ended up having that negative news that ended up happening, we can see that the Japanese yen ended up pushing to the upside. Oh, excuse me. We've seen that sorry once again. We end up seeing that the Japanese yen end up pushing up very strong right around that 2 o'clock time. And it was the strongest pair out of every one of the pairs. The Australian dollar was one of the weakest pairs out of every one of the pairs. You would think that with the Australian dollar having good overall retail sales news, that it would actually end up being the complete opposite. But the Japanese yen started making its overall move when it comes down to pairs. We're kind of getting to some of those overall trading opportunities as well. The pound ended up pushing up right around the 4 o'clock time. It was the strongest pair right around 5 o'clock this morning. Since then, the US dollar has kind of stabilized, and we see that The New Zealand dollar and the Australian dollar are pretty much the weakest pairs at this particular point in time, with the euro basically being in third. So we have to keep that in mind when it comes down to being able to look at overall trading opportunities, and we will do so by being able to take a look at the big three. We take a look at the big three. We got exactly what we wanted yesterday. We wanted the market to be able to give us an opportunity of being able to see how the market was going to end up reacting. We end up seeing that this market has touched past resistance equals future support. Currently, right now, this market is below this overall trend line. We're looking to see how this overall news is going to end up affecting the overall market. When I mean news, I mean non-farm payroll. If that happens and we end up getting a breakout, this overall move, then obviously going into Sunday and Monday, we're going to look for the retest. So once we get the retest, then after that, we can look to be able to buy up long term. Okay, and that's the overall move that we are looking for. So we're not going to end up trying to force the action and trying to get into the market or do anything else like that that's out of pocket. We're just going to play our same type of trading, trading strategy, same type of idea. Allow the market to be able to break out, and then after that, allow the market to be able to retest, and from that retest, then be able to trade it from there. Zap, thanks for the like. All right, so that's what we're looking at for this one. I just want to wait for this market to be able to break out, tell us that it's okay to be able to trade bullish, and then after that, let's be able to get in for that overall move. So we're still in a waiting pattern. Currently, the market's at 42%. We talked about this yesterday. We ended up saying that the U.S. dollar has not hit below the 10% when it comes down to our stochastic in a while. Even when it made that U-turn on the last AB swing, it ended up going right around the 30% range. So I will pay attention to the 30% range a little bit more compared to the 10% range. If it goes down below, then obviously I would like to average in when it comes down to being able to get in on the US dollar. So anything from the stochastic perspective, for me, anything around the 30 area, I am interested in being able to look to be able to buy when it comes down to this position. But once again, this day is going to end up being one of those days where we end up getting any type of good news. We probably should see a bounce up, and then after that, a little bit of we should see a retracement on Sunday, and that should give us an opportunity to be able to get in. Taking a look at oil. Oil was a very good green day for us yesterday. Let's go ahead and talk about a green day recap real quick, and be able to go from there. What actually ended up happening off of this overall trading pair was that we ended up taking a look at this overall counter trend line based off of the 2 hour. We end up trading down to the 3801 area. This market had a daily sub D extension at 3691. We just traded the 2 hour move based off of this overall movement and this counter trend line break that we ended up getting yesterday. From that overall move, we end up basically taking our profit down at that overall position at 3683. I'm sorry, at 3804 for this overall move. So very happy when it came down to that one. That's another $300 for us, an overall gain. Not a bad trade at all, quite frankly. It still has a little bit more leg room, but once again, nothing is really going to end up happening until right around 8:30. And that's going to affect every market, indices. That's going to affect gold. That's going to affect Bitcoin. Everything that we're going to end up seeing with this non-farm payroll is going to affect it for the first 15 minutes. So we have to be able to pay attention to how this market is going to end up reacting based off of that. And sometimes the best trade is no trade at all. If you have no trade at all in this overall position, then that means that you don't have any money at risk until you end up seeing exactly how the market is going to end up playing out. Right? So that was primarily the reason why I got out the US yen, was because of that primary reason. So that's where we're at right now. You are still in the US yen. Hold on to your position. Congratulations, you're up. You was up almost 50 pips last night. You end up taking profit. I will always say take profit before the news actually ends up coming out. So if you are awake and you are looking at your overall position, I would take profit before 8:30, and then after that, look to see if you could be able to get into another position, because you don't know if the market is going to react the opposite way. All right, taking a look at gold. We end up seeing that this market has went up to the 618. The D extension is expected to be at 1731 for the overall move. The market ended up breaking this triangle to the downside. Currently, there goes our breakout. We're going through this overall retest phase. Currently, the market is at 54%, looking for a counter trend line break to the downside. Once we end up getting that counter trend line break to the downside, then we can be able to trade it further down to 1731. We made money off of this market earlier this week, going up to 1900, which was a 382 for this overall move on the 2 hour. And currently, right now, there's really no position to be able to take. Remember, the market's in a no trade zone. You don't take a trade. That's pretty simple. When it comes down to being able to make any type of movements, when it comes down to that. All right, so just keep that in mind when it comes down to the movement. Market's in a no trade zone. There's no trade to be able to take. And then after that, play it from there. So we will go by and then take a look at anything else from that overall move. Let's take a look at the NASDAQ 100. NASDAQ 100, we actually end up having a very good week on this one as well. Very much in the green when it came down to this overall move. I'm looking at something that's a little bit different. We said that we wanted to get out of 11,600. The market ended up hitting 11,600 on the 2 hour, and then after that, absolutely end up falling on its face. So what's happening is this. We look at this overall move from a daily perspective. We see that this market end up hitting the extension, and then after that started to retrace down. Once it retraced down, it ended up breaking a of a upfield move, which means that we should be looking for a crown to the downside movement, which is the overall green lines that I have right there. Once the market ends up breaking an A, you're looking for a higher price to be able to get in and be able to trade down from there. Reggie, what's going on? Hope everything's going well with you. So overall, we're looking, as we look at it, we can see that this market is at right around 70 or 60%. This market has not broken into the sell zone as of yet, but we do have a counter trend line that is almost being affected for us to break. And it's right beside our point of control at 11,350. So we have to be able to pay attention to that as a whole. If we go into next week and we have a counter trend line break, then I am going to treat it based off of the crown fibs on the downside movement or where this market can go. So we can look at this as in 3 different positions, and this goes back to our original thought process when we were trading it to the downside. The weekly 382 is at 10,236. The daily D extension is at 99.90. So we could be looking at that overall position for that move, or we can look at it from a overall custom field perspective and see exactly where the market would end up falling from that overall number based off of this movement, and that currently would end up being right around the 92 number. I'm not ready to say that we're going to end up trading this as a crown. I am interested in being able to see how the market is going to end up reacting. I think it will go to the 382. We just have to look for a counter trend line break to the downside and see if we end up getting that. We may end up having a trading opportunity. But overall, we made money on the market going up. We can make money on the market going down, but we have to get confirmation of a trend line break off of this move. So if we go to the 2 hour, what we can see is if we use that same counter trend line that we end up looking at, we do have a break on the 2 hour from this overall move. So there goes our breakout, right? Now, once you end up having a breakout, you're always looking for a retest. At this particular point, the market is in the buy zone. We do not buy when the market is trying to retest on this overall move. It doesn't make any sense because the market can be able to move down at any point in time. So the only thing that I'm looking for is a high price below the trend line. If we get that and the market breaks a trend line break to the downside, then bam, there you go. You have a sell to the downside. If that does not happen and the market keeps on moving to the downside, then we don't trade because once again, that's a lower probability trade to be able to take at this point in time. So overall, that's the one thing that I am looking for. If it does break the trend line to the downside and give us a high price to be able to sell maybe on Sunday or maybe on Monday, then we have an opportunity to be able to trade and stay in the trade for a few days off of that move. If not, then we just look for different opportunities, and there's plenty of opportunities to be able to trade in the market. All right, so let's go to the major pairs. I want to start off with the US yen because that was the pair that we ended up talking about selling on yesterday. We ended up taking a sale at 105.50. I end up getting shaky hands on this one. I will be honest with you, and I end up cutting my trade out with a loss. Looking at what happened this morning, I wish I would have stayed in and would have just scalped the market. Probably made about $200 and would have kept on moving on from there. But I took a very small loss because the market ended up making a new high based off of this move within the first hour or two in the overall move. I don't like when the market makes new highs from the counter trend line break that we end up having. To me, that yields and tells me that it's not the best position to be able to be in. And I'd rather take a short loss than have a continued loss from an overall move on this one. So overall, remember, there's a long-term crown D extension that is expected to go to 99.20. Currently, right now, the market ended up retracing to the downside. Well, end up breaking the trend line, and it's basically going to the downside. We do have a confirmed break. We had a retest yesterday, so we have the confirmed break with a retest, and we had a move to the downside. The problem with this move is that this market has been having struggles to be able to get past the 105 area. Now, if we end up having a bad non-farm payroll number, then this could spell very good opportunities on being able to trade to the downside for the Japanese yen. Now, you have to be able to pay attention to what's going to end up happening with this move. I think we're going to end up having light trading volume all the way up until about 8:30 before the market actually ends up making this decision. Currently, the market is at 105.20. Once again, if you are in this trade from yesterday, instead of holding your overall position and risking your overall profit on this one, I would take the 30 pips profit, and then after that, wait till 8:45 to see how the market is going to end up reacting from there. If you get a trend line break to the downside and it gives you an opportunity of being able to get in, then bam, there you go. Remember, we are interested in being able to trade when the market goes up to the 106. I will have a pending order set and ready to go at 106.15. So if this market does pop to the upside, then I would look at being able to sell once the market gets up to that high price. And I think that's the only reason why I got out of the trade in the first place, was because I was trying to get a higher value right around the 106 area in the first place. So as long as this market is basically retesting, you can either take profit, or you can stay in it, or you can look for a counter trend line break to be able to trade to the downside. Currently, right now, I'm more leaning to, I want to see what happens at 8:30, and then look at making a decision at 8:45 to be able to make a trade. If I do make a trade today, if I don't make a trade today, then obviously I wait until Sunday, have a game plan with a clear direction on how the market is going to end up moving. Let's take a look at the Australian dollar, United States dollar. Currently, right now, the market is at 54%. It's going through its overall retest of a phase. It completed 1D extension throughout that overall transition trade of last week. We're still in a transition type of trade right now. I think this will be the biggest drop for a overall move. We just have to time it. Once we end up getting into it, anything above 72 in my mind is a very good position. The market end up going up to 72 and end up hitting right at 72 before pushing down to 71.50. So currently, if you got into the market at 72, then you should be up 50 pips. But you did not get into it, kind of like just being a little bit more conservative and kind of seeing how the market's going to end up going. The market tried to break the trend line to the downside, but it did not complete it. So if this one goes and it's a positive news for the U.S. dollar at 8:30 to 8:45, I'm going to take a position on this pair, and I'm looking for a quick little retracement off the 15-minute, and then after that, I'm looking to trade it down all the way down to 66.50. Which is at this point right around 500 pips. If it does give me a trade to be able to take, then I am interested in being able to take that, because once again, we have the news against us, or we have the news in our favor. And obviously the US dollar index should break out of that overall trend line as a whole. So that would allow us to be able to make a decision towards being able to sell with a higher probability on this trade. But currently right now, not interested in trading it yet until I end up getting some type of confirmation. So that's where we are when it comes down to that pair. The Eurozone and the New Zealand dollar is making the same type of move. The only difference is that when we look at it, the Eurozone, the euro versus the dollar has already broken past that trend line to the downside, and currently we're on the backside of this trend line right now. So if you remember, we end up having bad figures when it came down to the Eurozone for the overall numbers. And we end up getting a trade we end up getting a retest off of this move a little bit earlier. Currently, the market is at 25%. This one will be a tricky one because, quite frankly, it's already done retest the overall backside. With it already retesting the overall backside, the only thing that we can look for, we end up saying, is there a counter trend line break to be able to get in? If there's a counter trend line break to be able to get in on this overall pair, then you have to be able to take the trade and understand that this market is going to end up moving. On the 2-hour, it did not hit the 2-hour D extension. I'm looking for the market to be able to push up a little bit more if it can, and it gives us a counter trend line break on a higher time frame. On a lower time frame, we should be okay. for it being able to get in. Anything above 1.17, I think, is a solid position. Obviously, we're trying to trade down to 1.14, so it's about 300 pips for this overall move. But we did have a breakout and a retest already. That retest happened right around 3 o'clock this morning. So you got in right around the 1.1740 area. Hope maintain your positions, this hold from there. If you did not get in because of trading, doing a fundamentals day, like always, just wait 15 minutes until after the economic news happens, and then after that, make your decision from there. Let's go U.S. U.S. Canadian dollar market has consolidated a few days, and then after that went bearish for the overall move. We should have a fractal high. I'm kind of curious on why we don't have a fractal high. I see that the market ended up trying to break past 134 and it was not able to break past 134 previously. And we're on the outside of this trend line as we're speaking right now, but we're in a no trade zone. So we should be looking for a buy overall. We do have a break to the upside already, at least starting off. And from that overall movement, the market is in a sell zone as we speak. This would be probably one of those trading pairs that I'll wait for on Sunday to be able to get in. And I will use a 2-hour. I'll use a 2-hour FIB to be able to make a decision on how this market trades. So I'm kind of looking for a little bit of a retest first before being able to trade it to the downside. We definitely had a breakout, so just looking for the retest to be able to get back in, and then after that we can be able to go from there. But that's pretty much it on it. It's nothing really to do on that one yet. U.S. Swiss franc market is at 40%. Remember, the U.S. Swiss franc was the leader when it came down to the first initial move on this breakout toward the downside. Currently, the market is at past resistance equals future support. I am more interested in being able to take a buy on this one almost right now, solely because if we're turning this consolidation move into a future support, the market is probably not going to bounce down any further. The only thing that will probably end up happening would be that the market will end up bouncing to the upside, and then after that going from there. If there's any type of good news. Now, going to the 2-hour, we do have a breakout. The market is in the market has slightly retested, but it's in the sell zone area. Anything below 92, I think, is a great number to be able to get in. I want to see how the market is going to end up reacting towards the overall news first. If the news is slightly negative and the market ends up moving to the down, sorry, sorry, I'm coughing into the mic. That's not a good thing. Let's try that again. If the market ends up giving us a downside price for us being able to get into in the buy zone on the 2-hour, with this market retracing right around the 91.80 area, then I think that's a solid price to be able to get into. I see that this market has created some areas of where we should see that there's massive support, where the market has said that this past resistance is a future support. With that being said, I think this would kind of be the opportunity of saying, okay, well, I will almost be interested in this going ahead and just taking a chance in this buying this one right now. And kind of forgoing that overall rule of just waiting 15 minutes on the US dollar. The only reason why I say that is because if it does break out, it's going to break out quick because it's already done broke out and it's already done retest. Now, I don't have to make that decision right now. I can make that decision before the next hour and kind of see how this market is going to react towards the downside. However, if this market keeps on pushing and giving us another support price right around the 91.80 area before the trade actually ends up coming out in the morning, before the trade actually ends up coming out before the non-farm payroll, I'm going to take a buy. And I'm going to buy it up to, obviously I'm going to end up buying it up to the 93.80 area where we originally thought that this market was going to end up moving to overall. And we'll end up going from there. So this one is more of a higher alert when it comes down to trading. It's already done giving us that breakout. It's already done giving us that retest. Typically, the U.S. Swiss franc, when it does move, it moves in a direction very quickly. But when it makes its mind, it ends up making its mind very quickly about how the movement is going to end up reacting. Let's take a look at a 2-hour fib, and let's see if we can be able to get this straight when it comes down to a overall move, and we can kind of get an idea about where we're at. Currently, right now, the market has hit the 618. Currently, right now, the market has broken out of the trend line. This is considered to be a R2 trade. I do like R2 trades are the highest trades that you could be able to take on any type of probability system because it allows you to be able to get in and average in on trades more. And it has confirmation of a breakout for this move. Once again, it kind of goes back to how you're going to end up reacting to overall economic news. I'm going to let this market kind of fall down a little bit more and kind of get me into the best position. But I am interested in being able to buy. I probably might place a pending buy order. No, I'm going to let this one kind of play out. I'm going to look at being able to buy right around the 91.80 area if it does fall down again. If it just pops up to the upside and it just gives us a move from there, then I don't feel bad on taking a buy on this one. Stop loss on this one will be at 91.30. Stop loss end up being at 91.30 on this overall pair. And from here, if we're looking at this for the overall move, let's go ahead and get this set up so we can see what that's going to look like. I don't want to hesitate on this move if it does happen. So stop loss is at 91, at 91.30. From here, if we took the trade right now, that would be about 75 pips. We go and use our FMA and kind of get an idea about what's happening with that. That's our Forex money advisor. It kind of lets us know exactly what we need to get in for his overall trading. On this overall trade, I'm going to end up trading with 5% on my